Welcome to Talk Tickers. We cut through the earnings call noise to bring you the insights that really matter.
That's right.
Today, we're diving deep into the latest report. We'll pull out the key numbers, the strategic moves, basically what you need to know.
And overall, it looks like a pretty positive quarter.
Yeah.
Definitely saw some notable growth in several key areas.
Okay.
Argentina, for instance, was a real standout.
Yeah.
Big growth in gross merchandise volume, GMV, and items sold. Plus, significant margin improvements there.
Interesting. What else jumped out?
Well, their 1P, the first-party business, also showed strong GMV growth. Pretty broad-based across markets and categories.
And I heard the supermarket category within 1P was doing particularly well.
Yeah, very rapid growth there, and margin improvement too. Logistics investment, that remained pretty consistent with past periods, as a percentage of revenue.
Okay.
And the credit business, particularly in Argentina, saw really substantial growth. Portfolio size is way up, and profitability improved.
And the quality of those loans. Any concerns there?
Actually, asset quality looks strong. Credit card delinquencies, specifically, are at a record low.
Wow. Okay. Anything else before we dive deeper?
Just quickly, the marketing investments in Brazil, particularly around digital banking and getting new customers, seems like that's starting to show some positive traction.
Got it. Okay, let's unpack this. Argentina first, you said standout performance. GMV growth of 126% year over year, and items sold up 52%. That's huge.
It really is.
Yeah.
And what's driving, it seems to be a couple of things. There's some demand recovery, sure.
Right, compared to last year.
Exactly. But it's also market share gains. They've been executing well on things like shipping, pricing, financing options, and just having the right selection of products.
So a combination of better execution and maybe a better environment.
Precisely. The Argentine economy has, stabilized somewhat. Lower inflation, decreasing interest rates. That's really helped.
How so?
Well, it directly boosted their credit book. That grew like 4 times year over year in dollar terms.
4 times.
Yeah. And this overall stability, it fed into their consolidated profitability for Argentina too. That improved by about 11 percentage points.
That's a massive jump. Now, credit cards, they've been pushing those elsewhere. What about Argentina? Any plans?
It's interesting, right? They're focusing their credit card efforts mainly on Brazil and Mexico for now. No immediate plans announced for launching a credit card in Argentina specifically.
So sticking with their current credit products there for the time being.
Seems that way. Brazil and Mexico are the priority for the card rollout.
Okay, let's switch gears to the 1P business. That first-party side, strong growth there too, you mentioned. And just to remind everyone, 1P is where they sell products directly to you, not through third-party sellers.
Right, and that 1P business saw 102% GMV growth year over year. Really strong.
What's behind that?
It seems to be better selection, being more competitive on price, and also getting better on the back end. More automation in onboarding products, buying, pricing, that sort of thing.
And it's across different types of products.
Yeah, pretty broad-based. Consumer electronics is still big, of course. But like we touched on, the supermarket category is really taking off.
Growing faster than anything else in 1P.
That's what they said, yeah. Up 65% year over year and accelerating. They put it down to just a stronger overall, offering better product selection, consistency.
Making it easier to shop for groceries online, maybe.
Exactly.
Yeah.
Easier navigation, features for repeat buys, better promotions. And strategically, it makes sense for them to push 1P supermarket.
Why is that?
Better unit economics compared to the marketplace model for groceries. And it opens up more ad revenue opportunities, from food and beverage brands.
Makes sense. Okay, logistics. They've poured a lot into that network. Any changes this quarter?
Not really. The expansion plans they announced previously, especially for Brazil, seem to be on track. No major shifts reported.
So still investing.
Yep. Continuing to invest capital in fulfillment centers, basically getting ready for expected demand growth. And like I mentioned, the spending level as a slice of revenue is consistent with last year. Steady investment there.
Let's circle back to Argentina's margins. That 11 percentage point improvement is really something. What were the main drivers?
It's a few things working together. Growth across both sides of the business, commerce and fintech, helps dilute their fixed costs, right? Makes everything more efficient.
Spreading the overheads.
Exactly. Plus, they found efficiencies in logistics and other operations. But a big piece is definitely the credit business profitability improving.
Okay.
More people using it, number one. And number two, those falling interest rates mean their funding costs are lower.
Ah, okay.
And yeah, increased use of credit cards and installment plans also help boost revenue.
Got it. And the overall health of the credit portfolio, you mentioned low delinquencies,
Yeah, looking pretty good. They are seeing a higher share of credit cards in the overall loan mix.
which can sometimes be riskier, no?
Sometimes, yeah. But the asset quality on those cards is actually improving. Delinquencies are hitting record lows, like I said.
Why is that happening?
Part of it is a deliberate move towards customers with higher credit scores, focusing on, let's say, less risky borrowers.
Okay, so that lowers risk, but maybe lowers the potential return too.
Potentially, yeah.
Oh.
Lower risk can mean lower spreads, lower interest rates earned. It's a trade-off. But interestingly, Argentina actually has the lowest delinquency rates overall.
Really? Why is that?
They think it's because there's generally less private sector debt in Argentina, and people use their platform for lots of everyday transactions, so maybe they pay back smaller amounts more frequently.
Fascinating. Okay, let's talk Brazil. That strategy of offering 120% of the CDI rate. That sounds aggressive. Remind us, CDI is the benchmark interbank rate there.
That's right, yeah, it's a key rate. And offering 120% of it, well, it's largely a marketing play, a positioning strategy.
Aiming to be the top digital bank.
Exactly. They want customers to see them as their main bank, increase that principality, as they call it, improve retention, get people using more of their services.
And there's a whole campaign around it.
Yep. New yellow branding, partnership with the singer Anita. It's a big push. But there are conditions attached to that 120% rate. You need to be in their loyalty program, their investment limits, things like that.
Right, not just a free-for-all. Now, is this aggressive push in digital banking hurting their credit business in Brazil at all? Any signs of stress?
Well, interestingly, they say no. No deterioration seen in the Brazil credit portfolio. In fact, the newest credit card cohorts are apparently showing the lowest first payment defaults they've seen.
So they're managing the risk.
Seems like it. They've taken steps like being more conservative with lower credit score customers, issuing fewer of those really small microloans.
And how are they funding all this lending in Brazil and Mexico?
Mostly through warehouse facilities. Basically, credit lines from major banks, backed by the loans themselves.
Standard practice.
Pretty standard, yeah. Though in Brazil, they did make a tactical adjustment, holding some loans directly on their own financial institution's balance sheet, probably to optimize funding costs a bit.
Okay. What about competition? How are they seeing the landscape?
Well, first off, they don't expect the slight tightening in credit offerings to really hurt commerce growth much, because that blue money, the money flowing within their ecosystem, keeps growing.
Right. The funds people have in their accounts or their credit lines with them.
Exactly. It's increasingly integrated. For Argentina, they do expect the credit card, whenever it launches, likely second half of the year, to be pretty relevant. They'll be cautious, learning from Brazil and Mexico.
What about Mexico specifically? Any challenges there?
Yeah, they mentioned a slower start in the tech category. Seems like aggressive competition and maybe some gaps in their product selection hurt them there initially.
Are they addressing that?
Yeah, they're using pricing adjustments, rebates, trying to catch up. But outside of tech, overall GMV in Mexico is still strong.
Okay. And you mentioned NIMAL earlier, the net interest margin. Why is that compressing?
It's a few factors. Higher mix of credit cards, which might have different margin profiles. The move up market to higher credit score customers, like we discussed. And just the country mix, though. The higher margins in Argentina are offsetting that somewhat.
And competition in fintech is heating up in Mexico.
Definitely. They're focused on becoming the leading digital bank there, competing head-on with traditional banks and other fintechs. Key weapons are those high-yield accounts and credit cards.
What about international e-commerce? Any impact from U.S. tariffs or anything?
They haven't seen any significant change there or in cross-border trade into Latam generally because of tariffs. Argentina opening up its market is interesting, though. Creates opportunities, but also brings in more competition.
Right. So looking ahead, what's the margin outlook? Q1 EBIT margin was up.
Yeah, Q1 benefited from that favorable country mix, more contribution from high-margin Argentina, plus improvements in the core business itself. That helped offset the big investments in Brazil and Mexico for logistics and credit cards.
So they're balancing investment and profit.
That's the focus. Long-term growth in commerce and fintech across the region, even if it means some short-term margin pressure from those strategic investments.
And advertising, how's that business doing?
Growing strongly. Brazil, Mexico, Argentina, all showing good growth. Driven by improvements in their ad products, especially for brands and display ads, and just getting more sellers using them. And they see MercadoLibre, their upcoming TV content platform, as a future growth driver for ads too.
Interesting. And the shipping investments, how clearly are they impacting margins in specific markets?
You can sort of see it in the contribution margins. Mexico and Brazil have lower contribution margins compared to the big improvement in Argentina, partly reflecting those heavier shipping investments.
And cross-border trade, still small.
Relatively small, yeah.
Yeah.
Mostly into Mexico currently. But they are ramping up initiatives into Argentina now that the market's more liberalized.
Okay, one last check on that blue money concept. How big a piece of the pie is it?
Rough estimate, they put it around 20-30% of GMV in their main markets. That's credit plus funds held in the ecosystem. And importantly, it's trending up.
So becoming more central to how people transact.
Exactly. Shows increasing engagement. And one more competitive point, they're keeping an eye on TikTok Shop launching in Brazil. Seems focused on low-value domestic stuff initially.
Any impact expected?
They noted it seems to overlap more with other platforms for now. And hey, new entrants can sometimes bring new users into online shopping overall. In Argentina, they're seeing players like Shein and Amazon showing more interest, launching things, but no major impact observed yet. Their own cross-border shipping into Argentina is actually growing.
Okay, so summing up. It feels like a company really hitting its stride in places like Argentina, leveraging economic recovery, but also making smart moves in their 1P business. Meanwhile, they're investing heavily strategically in logistics and digital banking for the future.
That's a good summary. They're juggling growth opportunities with necessary investments in a very competitive, very dynamic region.
It definitely makes you think about that balance, doesn't it? How they sustain this balancing the big investments, especially in Brazil and Mexico, against maintaining profitability, particularly with competition heating up everywhere.
Yeah, what are the crucial factors for you? What needs to go right for them to keep winning across all these different markets long term? It's a complex picture.
Absolutely. Okay, let's pivot. It's time for our This Is Not Financial Advice segment, pure speculation, hat on.
Let's hear it. Outrageous, but plausible.
All right, idea one, the Argentine comeback. Given that crazy growth, the margin expansion in Argentina, even with all the historical volatility, what if you took a long position in some local Argentine stocks,
Yeah.
specifically ones really tied to domestic consumption?
Ooh, okay. The bet being that stabilization continues, consumers feel more confident, they spend more, and these domestic companies benefit hugely.
Exactly. It's betting on the macro trend continuing, fueled by what we're seeing in this specific company's results.
Okay, the outrageous part is clear, given Argentina's history. What's the plausible part?
The plausibility comes from the current stabilization actually happening and the scale of the recovery we're seeing reported right now, if that holds even for a medium term.
Big if. Okay, I see it. But the caveat here has to be massive, right?
Oh, absolutely massive. This is highly speculative. Political risk, economic risk in Argentina are still huge. Currency risk is enormous. This is pure high risk, maybe high reward thinking triggered by these earnings numbers. You absolutely have to do your own deep research, understand all those risks.
Got it. Okay, what's idea two?
Idea two, the Brazilian digital wallet war winner, focus on Brazil. They're spending big on marketing that yellow branding, the celebrity endorsements, the high CDI rate offer.
Right, the push to become the main digital bank.
Exactly. So the trade idea, go long on the broader digital payments and services sector in Brazil. The bet is that this company's aggressive strategy succeeds in grabbing significant market share and boosting transaction volume, maybe taking share from traditional banks or even other fintechs. You're betting on the overall pie growing and them taking a bigger slice, lifting related sectors.
Okay, so less direct, more thematic, based on their aggressive push. Plausible because the digital banking shift is real in Brazil. What makes it outrageous?
The sheer level of competition. The digital banking space in Brazil is incredibly crowded. New players, established banks fighting back, and regulatory changes are always a risk that could hit profitability for everyone in the sector. There's no guarantee this specific company wins or that their win translates cleanly to sector-wide gains you can capture easily.
Right, so you're betting on their strategy succeeding and having a significant ripple effect, but acknowledging the intense competition and regulatory uncertainty. Again, purely speculative.
Purely speculative. These are just ideas sparked by the earnings call, not recommendations. Do your own homework.
Definitely.
So just to wrap up, this deep dive shows a company firing on several cylinders, especially in Argentina and 1P, while placing some big bets on logistics and digital banking. The competitive landscape is definitely keeping them on their toes.
Requires constant innovation, constant adaptation.
For sure. And remember, everyone, This discussion was for informational purposes, that not financial advice segment.
Yeah.
Purely speculative ideas for you to think about, not act upon without research.
Absolutely. Dig into the details yourself. Consider how these trends fit your own view of the market.
Thanks for tuning in to Talk Tickers.